All right, as Trump settles in his office for his second term, something strange is happening. Everyone knows he is all about this America first thing, yeah, and he keeps talking about making America great again. But here's the thing. When it comes to China, Trump kind of brushes it off. You know, he mentions it, but only briefly, like it's no big deal. Even though he was all about slapping huge tariffs on China before, like 60%, 200%, you name it, he's now kind of soft pedaling it. He brings up China in his speeches, but it's more like, oh, we'll deal with that later. Why is that? On the surface, that makes perfect sense because he's planning to visit China within his first 100 days in office. After all, he is a businessman. So if he went all hardcore anti-China right now, it'd just make things awkward, right? It appears Trump is softening on China, but is he really? No. And here it is why the big picture for U.S. China relations over the next 4 years. Yeah, it's still going to be all about confrontation. I mean, think back to Trump's first term. What was the main theme? Confrontation, confrontation, confrontation. Remember that whole Section 301 investigation he launched against China back in 2017? That led to the trade war, which didn't exactly go away. Now, in this 2.0 version of Trump, it's still about confrontation, but it's like more intense, but also more fragile. Why? Well, the U.S. is broke, man, like way more cash strapped than it was during Trump's first term. There's also Elon Musk, who kind of swooped in and helped Trump win the election. After that, Trump basically flipped the script. He brought in a bunch of billionaires to run the White House. His whole plan is to shake up the political system and deal with China in a business-like way. Sounds cool, right? But there are two big problems with China that are for Trump, is ignoring, which will shatter his plan. First off, the U.S. is way more dependent on China economically than it appears. Like last year, the trade volume between the U.S. and China was $680 billion, which is actually a 3.7% increase from 2023. Exports to China grew by almost 5%, and imports only dropped by 0.1%. Plus, there's $260 billion in mutual investments. Oh, and get this, trade with China supports over 10 million jobs in the U.S., and there are more than 70,000 Chinese companies operating in America, generating at least $50 billion in profits. So yeah, for the past 8 years, the U.S. has been talking about decoupling from China, but guess what? They're actually getting closer, not further apart. This means that if Trump wants to boost the U.S. economy, he's going to need China's help. Like no matter how great your plan is, you still need someone to build it, right? And globally, only China can do that. But here's the catch. You know, Trump's got this whole anti-China cabinet, and the military-industrial complex is breathing down his neck. So if he wants to work with China, he's going to have to make some compromises, which his team isn't exactly thrilled about. If he can't pull that off, then the U.S. is pretty much stuck on this path of confrontation. And trust me, that's not going to end well. Secondly, China's influence in the region has totally surpassed the U.S. Like, they're not the pushovers they used to be. Trump talks about not letting China control canals, but really, it's more about suppressing China's influence. The problem is the U.S. doesn't have the power to do that anymore. Just look at what's happening in Asia. Trump's sent Rubio to the Quad meeting with India, Japan, and Australia. But guess what? Japan just raised interest rates, which kind of stabbed the dollar in the back. Plus, Japan's prime minister has been cozying up to China lately, same with Malaysia and other Southeast Asian countries. ASEAN nations actually like China more than the U.S., according to polls. So, without support from Japan, India, Australia, and most of ASEAN, the U.S.'s Indo-Pacific strategy is kind of falling apart. With these two big enough problems already jeopardizing his plan, are there more that Trump has to face? Yes, because China is also dominating in other sectors. For starters, let's talk about artificial intelligence. You've probably heard about this, right? Like Meta's CEO, Zuckerberg, is freaking out because a Chinese company just came out with an AI model that's blowing everyone away. It's making huge progress, and it could leave the U.S. in the dust during the Fourth Industrial Revolution. Why is all this happening now? Well, here's the deal. The U.S. might be entering its most vulnerable period, and global markets are about to get rocked. You know, after the pandemic, the U.S. raised interest rates to bring money back into the country, and a ton of cash flowed into places like NASDAQ and the S&P 500. But here's the thing. All these companies like NVIDIA, Meta, and Microsoft, they're betting everything on AI. They think AI is going to be the driving force behind the Fourth Industrial Revolution. But here's the problem. The U.S. suddenly realized they might not have enough juice to keep up. A few days ago, Trump announced this big Stargate project where he's planning to dump $500 billion into AI infrastructure. Like, why the sudden rush if they're already ahead in AI? Why are they making such a big deal about it? It's almost like they're panicking, you know? Musk said something interesting. He mentioned that AI has already learned everything humans know. By 2025, the U.S.'s early lead in AI might be gone. They're scrambling to build computing power and train models. But guess what? China's right behind them. Companies like DeepSeek are catching up fast. Their V3 model is outperforming some of the best open source models from Meta and even OpenAI's GPT-4o. And get this, it's only costing them a fraction of what the U.S. spends in its open source. Meanwhile, DJI drones are dominating the skies, and Unitree's robot dogs are ruling the ground. The U.S. is struggling to keep up. So, yeah, the second half of AI is here, and it's all about real-world applications. It's not just about building models anymore. It's about optimizing them and having the best engineers and geniuses working on them. And guess what? China's got a ton of talented people. Our education system is shifting to focus on finding geniuses who can thrive in the AI era. China's also killing it in the electric vehicle market. They control over 50%, sometimes even 70 to 80% of the battery, motor, and electronic control markets. Tesla had to rely on its Shanghai factory to break through production barriers. And you know what? China's making electric vehicles affordable, two-wheelers, three-wheelers, all with autonomous driving features. Meanwhile, U.S. companies can't even compete. It's like China's got the whole supply chain locked down. Let's switch to semiconductors for a sec. SMIC just announced a 40% price cut for processes above 24 nanometers. Think about what that means for U.S. semiconductor exports. Plus, the Netherlands is saying they'll decide their own export policies to China, meaning ASML can sell its machines wherever it wants. So yeah, the U.S. is kind of losing control. In short, the U.S. is under pressure from massive investments in AI, but they're struggling to keep up with China. They're trying to boost oil and energy exports to reduce trade deficits, but that's making the dollar weaker. If inflation gets out of hand, the U.S. is going to face some serious internal and external challenges. Add to that the growing mountain of debt, and, well, time's running out for them. In 2025, China is going to step into a new era with confidence, while the U.S. is heading into a fragile period of change. The global capital market drama is just getting started, comrades. The best is yet to come.